Welcome to Market Momentum, where we use AI-driven analysis to cut right through the noise. Today, we're going to break down exactly what's shaping the markets, from the big economic picture all the way down to the key signals in stocks, crypto, and even precious metals. All right, let's dive in. So, let's kick things off with a big puzzle that has a lot of investors scratching their heads right now. We're getting some genuinely great news about the economy, but the market's reaction? It's been a little nervous. So, what's the deal? Why is good news suddenly making people jumpy? Okay, here's piece number one of that good news. U.S. GDP growth. The street was expecting something around 3.3%, but the actual number? It came in at a sizzling 3.8%. I mean, that's not just good. That's a sign of a seriously robust economy. And it doesn't stop there. Take a look at the weekly unemployment claims. The forecast was for more, but they came in at just 218,000. This tells us the job market is incredibly resilient. People are working, people are earning. So you've got this picture of strong growth and a super solid job market. Normally, you'd think that's cause for celebration, right? But here's the twist. In the short term, the market has this good news is bad news mentality. The big fear is that if the economy is running this hot, the Fed might just decide to hold off on cutting interest rates. But, and this is a huge but, let's not get lost in the short-term jitters. We have to look at the fundamentals. A strong economy is, at its core, fantastic for businesses. It means more spending, higher sales, and ultimately, it should lead to continued growth in company profits. That's the bedrock here. Okay, so keeping that strong economic backdrop in mind, let's pivot to the U.S. stock market. Because all this short-term worry, it might actually be creating a fantastic opportunity for those who are paying attention. You know, if you zoom out and ignore the day-to-day drama, the technical picture for U.S. stocks looks really healthy. The S&P 500, still in a nice, clear upward channel. The Dow, same story, a stable uptrend. But our preferred index is still the Nasdaq, simply because of that explosive, AI-fueled growth potential in the tech sector. So what about these 2 or 3 day sell-offs that have everyone on edge? Honestly, they're not a reason to panic. In a healthy bull market, pullbacks like these are totally normal. They're like the market taking a breath. And you know what? They can be the exact entry points that patient investors are waiting for. And this all comes back to the golden rule of investing, said best by the man himself, Warren Buffett. The real game isn't about chasing every hot stock that's flying high. It's about building your wealth by making sure, first and foremost, that you don't take major losses. Capital preservation is king. So how do you actually do that? Well, you don't just rush in and buy the first red day you see. The key is patience. When a dip happens, you watch it. You give it a few days, see if the selling has legs or if it's just a quick shakeout. You want to enter when things start to calm down, when the price finds a floor. And hey, if you miss one and the market snaps back before you get in, don't worry about it. Another bus will always come along. All right, now we need to shift gears in a big way. We're moving from the relative calm of the stock market to the Wild West of crypto. And let me tell you, the technicals here are telling a very, very different story. We're hearing some serious alarm bells. Here is the number one red flag, and it's a big one. We just saw a huge injection of global liquidity, basically a ton of cash flowing into the financial system. In the past, that kind of event has been pure jet fuel for crypto. But this time, crickets. The money flowed right past crypto and went somewhere else. That's a huge departure from the norm and a major warning sign. And you can see this weakness reflected right in the charts. Our indicators for both Bitcoin and Ethereum have now flipped to sell. For Bitcoin, we wouldn't touch it unless it can get back about 11,300. For Ethereum, that critical line in the sand is 4,115. As long as they're below those levels, the risk is all to the downside. Now, you might be asking about the altcoins. Let's look at Ripple, or XRP. It's actually doing an interesting thing. It's trying to hang on for dear life at a key support level around 280. But even so, you've got to be extremely careful here. Until it can decisively break and hold above 290, any little pop or rally is probably just an opportunity for sellers to get out. Okay, for our final stop, let's talk about precious metals. If crypto is a story about hitting the brakes, metals are a story about a party that may already be over. The train, as the saying goes, has likely left the station. And if you want to see what I mean, just look at this chart. Silver's performance since the start of the year, a jaw-dropping 53% gain. That is an absolutely monumental run. And it tells you that the easy money, the big, fast gains, have probably already been pocketed. And look, this isn't just a gut feeling. The charts confirm it. We had specific price targets of 37.77 for gold and 45 for silver. And guess what? Both of those targets have now been hit. When you see a massive run-up and your targets are met, that is not the time to get greedy. That's the signal to step back and be patient. You know, there's a Japanese philosophy that I love, which says every flower blooms in its own time. It's such a perfect way to think about markets. Different assets have their seasons. For a while there, it was absolutely the season for metals. But right now, it looks like their time for explosive growth might be taking a well-deserved break. So after looking at all that, let's boil it down. What's the key takeaway? What's the actual game plan for an investor trying to navigate all this? It really comes down to this simple breakdown. For US stocks, the mindset should be to view these dips as buying opportunities, especially in the tech-heavy Nasdaq. For crypto, the message could not be clearer. Be extremely careful. The technicals are pointing down. And for metals, the party has peaked. The smart money has been made, and now it's time to wait for a serious pullback. But you know, no matter which market we're talking about, that #1 rule never ever changes. Protect your capital. That is the absolute foundation. If you can avoid the big losses, the gains will eventually take care of themselves. And that's our breakdown for today. What are you seeing out there? Do you think stocks are a clear buy on this dip, or is there more turbulence ahead? Let us know. Thanks for joining our channel, and if you got some value out of this, a subscription and a like would be hugely appreciated.